and welcome to the CNBC TV 18 special. I'm Shereen, Bhan. It's been quite a year for SpiceJet. The airline has turned around. In fact, it's delivered its fourth straight quarter of profits. The man who's been in the helm for the last 12 months, Ajay Singh, the chairman of SpiceJet, joins us now to talk about the turnaround story as well as the road ahead. Mr. Singh, appreciate you joining us here on CNBC TV 18. Congratulations on completing a year. If I may ask you, is the operational course correction that you had undertaken when you came back to SpiceJet now over and done with? If I were to look at the numbers, fuel costs, of course, are down 35% year-on-year, which, of course, has been the big beneficiary as far as aviation stocks are concerned and aviation companies are concerned. Your employee costs are down 10% year-on-year. Your interest costs are down 50% year-on-year. Has the operational course correction in that sense now, is it 50% complete? Is it almost complete?
I think we've come quite some distance from where we were last year. As you know, last year we had large number of flights that were cancelled just before the ownership changed, and the on-time performance was at 40%. SpiceJet had been losing money for 5 years on the trot, it was just the lessors were trying to repossess their planes, the vendors were asking for their money. So it was a very difficult situation for SpiceJet. And I think what SpiceJet had lost in this period was really the confidence of its customers and of its partners. I think we've been able to make significant recovery in the last 1 year. As you know, consumer confidence has been pretty high. The last 9 months, SpiceJet has flown with an occupancy factor in excess of 92%, which clearly shows that people have come back to fly on SpiceJet. Lessors have returned the planes. The outstanding payments, which were close to 2,200 crores, are now close to 700 crores. So a lot of the settlements have been done, a lot of the payments have been made. The on-time performance is amongst the best in the industry at this time. The cancellation rate is by far the lowest of all airlines in India. So I think we made significant progress. But to say that this is all done and dusted and complete would not really be accurate. I think there is just lots to be done for SpiceJet.
Okay.
You mentioned some of the costs that had been reduced.
Yeah, let me ask you about that, sir. And if you can give us a picture as far as your total debt is concerned. I understand it stood at 1,418 crores at the end of 2015. Can you update us on the debt situation and what do you expect going forward? How much reduction would you expect going forward?
If I look at the total payables, when we took over the airline, they were close to 2,200 crores, this included the bank debt that was due and payments to vendors, etc. Now, at this time, that number stands at close to 700 crores. And part of that 700 crores is actually business as usual debt. So that puts us in a pretty strong position, and we expect that over the course of the next 12 months, we will be in a much healthier situation than we are today. So in addition to that,
can you quantify that for us, Mr. Singh?
It's tough to put an accurate number to it, but we expect that we will pretty much be left with only the business as usual sort of debt, which is roughly in the range of 300 to 400 crores. So that's where we should be in the course of this year. I think importantly, what we need to do going forward is to keep working on reducing our costs, the stickier costs that we have not been able to address as well so far, which is the cost of the acquisition of planes and therefore the lease rental costs for the planes, the cost of heavy maintenance of our fleet. So those are areas that we will work very actively on over the next 9 to 12 months. In addition to that, while we have made significant recovery on the revenue side, and despite the fact that average ticket fares have been lower by about 20 to 25% for the entire industry, revenues for SpiceJet have actually increased significantly. Both passenger revenues as well as ancillary revenues have increased significantly, and we need to keep working to ensure that...
Can you give us a breakup on that front, sir? Can you give us a breakup on the ancillary revenue part and how you see that going forward?
Well, when we started in January of 2015, the ancillary revenue accounted for about 6% of total revenues of the company. That number is close to 16% at this time. We expect to increase that further through the course of the year, and we are targeting a revenue of about 20% for ancillaries.
Okay, that's as far as the ancillary revenue is concerned. Let me also ask you in terms of costs, because the expectation now is that perhaps the best in terms of fuel costs has been enjoyed by the industry. We will have seen, of course, the rupee depreciate, and also prices as far as crude is concerned perhaps may have bottomed out at these levels. So what can we expect now in terms of fuel costs as well as employee costs, which are down 10% year on year? You were talking about further cost optimization. Can you give us a roadmap of what we can expect in terms of cost optimization from here on?
Well, there are two large pieces of cost that are still to be addressed. The first is the cost of acquisition and lease of planes, and that is being addressed through a new order that we expect to place for aircraft, as well as shifting from having a significant number of planes on wet lease to a dry lease situation. That will help us reduce cost of the planes. In addition to that, the heavy maintenance costs, the engineering costs, those are things that we are looking at in terms of renegotiating some of those contracts and entering into new contracts simultaneously with the acquisition of new planes. So both those.
So what would that then mean in terms of margins, sir? What would that then mean and translate into in terms of margins, you being able to bring down the costs as you just articulated?
I don't want to give guidance on margins. As you know, the
acquisition plan, we talked about it the last time you and I had a conversation. By when do we expect that order to be placed? And in terms of how many aircraft you expect to add on in this particular calendar year, is there a number now that you've fixed on?
Well, firstly, on the order itself, we are working very actively and aggressively with both Boeing and with Airbus, and we expect to have that done soon. It's a pretty exacting and detailed exercise. We don't want to rush it because these are orders which will live with SpiceJet for years to come, and so we need to get it right. And we hope to get it done soon, but I don't want to put an exact time frame to it. In terms of the addition to fleet,
can we expect it in this half of the year, sir? In this half of the year, do we expect you to finalize the order in this half? And can you give us a number in terms of whether you fixed on the number of aircraft that you're going to be acquiring?
Well, as you know, it will be a significant order. Again, the exact number depends on the commercial negotiation that we are doing. It's clear that SpiceJet needs a significantly large number of planes. The aviation market is growing at 20%. SpiceJet is already filling its planes 92-93% month on month. Clearly, we need capacity, and so the order will be large, but the exact size of the order will depend upon the commercial negotiations that we are currently engaged in. In terms of the
ballpark number, Mr. Singh?
Well, I've already said that this will be in excess of 100 planes. So it could be anything in excess of that.
Okay.
In terms of addition to the fleet this year, we are expecting to add at least 10% to our capacity in the summer and an additional 10% in the winter schedule. So there will be significant addition to capacity this year as well.
Well, what is the outlook now as far as ticket prices are concerned, and do you believe that there is room now to see an appreciation on the price front, given the competitive nature of the business as well, with some of the newer players trying to eke out more market shares from the incumbents?
I think, what we've seen is that over the last 1 year, ticket prices have dropped, and they always drop when, fuel prices come down. But the net yield for SpiceJet has increased, and that's been a consequence of better revenue management. So going forward, it's a question of how we plan our network, how we design that network, how we run our schedules, and how we plan our revenue. We think that there is margin there, and we can improve the net yield to SpiceJet in the coming time. In terms of competition, of course, there will be competition, but you know, the market is really large, and currently still 2% of Indians flying, and all these tier 2, tier 3 markets opening up should give plenty of room for growth.
So what is going to be the aspiration there? We've talked about your regional plans and how that is linked to what you aspire in terms of market share gain.
You know, I don't want to be stressed about particular market share. I think it's important that SpiceJet grows, but grows profitably. You know, there's little point in just running after market share, which, as you know, in the aviation sector tends not to be so sticky. You can get temporary market share by launching massive sales and depressing your yield and fares. But the moment somebody else does it, that market goes away. So I think it's far more important to focus on profitability and ensuring profitable growth.
On that note, it is time for us to take a break. But when we return, we continue our conversation with Ajay Singh of SpiceJet.